Please, one video on market structure. This is the request one of our members posted in the group, asking that I make a video on market structure, and that's exactly what I want to do now. You know, I am here to serve you guys. I'm here to share knowledge on my view of the market. So if you have anything you want me to make a video on, you have any concept you don't understand and you feel I should give a tutorial on it, feel free to ask me in the comment box below. Okay, feel free to say it in the comment box below. Also, feel free to say them in our Telegram group and WhatsApp groups, including our TikTok page. Okay, just anything you want me to make a video on, anything you don't understand, just ask me and I'll respond to them as soon as possible. All right. Okay, so now let's talk about market structure in that regard. Meanwhile, if you are new to my channel or this is the first time you are seeing my video, please subscribe to the channel. Subscribe, subscribe, okay, and like this video, give it a thumbs up, and also drop your comments. Let us know what you think. Let us know your view on the topic. So what is market structure? I want to define market structure right now. What is market structure? When you hear the word market structure, what comes into your mind? Like I used to tell those of you that have been following me, the market doesn't move in a straight line. The market moves in waves, right? The market moves in waves. So if the market moves in waves, that means there is a pattern it prints. It keeps printing on the charts continuously when it is moving. So that pattern it prints continuously on the chart when it is moving. That is what we call market structure. I take it again. Market structure is the pattern that price prints regularly as it moves from key level to key level, from supply to demand, from demand to supply. So that pattern that market prints as it's moving, that's what we call market structure. Understood? Yes, you understand it. Okay, so that's the simple and clear definition of market structure. So basically, when price is moving, we all know that it doesn't move in a straight pattern. If you check through the market, you never see it moving in a straight pattern. You never just see a straight line. It's very difficult for you to see such movement. If the market moves or if price moves in a straight line, it would have been very, very easy for people to make money in the market. Assuming it just moves like this. When it wants to go down, it will just go like this. And then when it wants to range, it will just range like this. This would have been like, it would have been a child's play, right? Anybody will just enter the market and collect money and come out. But it's not like that, guys. It's not like that. So it moves in a very shabby way, like in an irregular manner. In waves, we call it waves. That's the right word. It moves in waves. So that's wave-like movement that price moves with. That's what we call market structure. Okay, it's forming all the structure and it is moving. And your duty as a trader is to be able to trade, like to be able to predict, or should I say follow the market in the direction that it is going. Okay, that's your duty as a trader. Follow the market in the direction that it is going. Now, for you to be able to follow the market in its direction, for you to be able to do that, that means you have to understand how the market moves. Okay, how to understand the movement of the market. That is the reason we study market structure. Okay, I am taking this very slowly so that everyone will understand it. Even the most slow to understand will understand it. Okay. Now, I have explained what market structure is. We have two types of market structure, and basically price moves in three directions. There are three phases in the market, just three. There are not four, there are just three. The first one is the bullish phase. The second one, that's the bullish phase. The second one is the bearish phase, and the third one is the sideways movement. Okay, so this is bullish, this is bearish, right? And then this is what they call consolidation, or you call it range. Here, the up and down movements, we actually call them trends. Okay, when the market is moving upwards or when it is moving downwards, we call it trend. All right, so these are trends. The market is trending whenever you see it moving, it is trending. Okay, so when they say that you should trade, basically trending markets, this is what I mean. You should trade the market that is moving upwards consistently, or the one that is moving downward consistently. Don't go trading the one that is moving sideways. That's what they normally tell us. Okay, so this is because the higher price goes, the higher the money you make. That's when you buy. Okay, now when you sell, the lower price goes, the more money you make. So basically, you want to achieve that in a trending market. Okay, every wise person, every thinking person, we want to trade the trending market, since your making of money depends on the distance price travels. It depends how high the price travels or how low the price travels. So you want to trade the trending market. You don't want to go with the ranging one that is just going sideways. Now let me show you what these phases of market look like. Let me show you what they look like. Okay, so at this point, at this stage here, we have this very one here. We have this here. Now this is a bullish scenario. Okay, it's a bullish phase. The price is moving upwards in this wave-like manner. Okay, it is oscillating. We call it oscillation. That's when we used to when they taught us types of movements in physics, secondary school physics. Okay, so oscillatory movement. This is it. Although this is not exactly the oscillatory movement, because oscillation is rotating within the same distance, but this one is moving in that form, but not exactly the same distance. Okay, so that's why we call it wave. I think wave describes it better. All right, so this is the bullish form, bullish trend, bullish market structure. The price is trending upwards. So when I say bullish, in case you don't know, it means upwards. Okay, so this is a bullish trend. These peaks, these points here on this bullish trend, they have their names. This starting point here is called low because it is the lowest point. Okay, that's the lowest point where price started moving from. Then this level is called the high. Okay, it is called high because this is the lowest point price started from, this is the highest as well. So this is the high. Now when price gets to that high, it drops. As it drops like this, so we call here a higher low. Why do we call it a higher low? It is because this low is higher than this previous low. Okay, This is a low, this is also a low, but this very low is higher than the previous one. You get it now? So that's the reason we call it a higher low. Okay, now this is another higher low, okay, because it is also higher than this low. Both of them are lows, but the low is higher than the previous, so we call it higher low. Now when you come to the high side, this is a high, but this high is higher than this other high, okay, so we call it higher high. All right, call it higher high. Then here is another high, but it is higher than the previous high, so we also call it a higher high. So that's how we name these things, that's how we refer to them. Okay, so when price is moving upwards, when you are in a bullish phase, price will keep giving you what we call higher highs and higher lows. Okay, so when you hear higher highs and higher lows, just know that it is associated with a bullish market. When you hear a bullish market or an uptrend, just know that it is going to be forming what we call higher highs and higher lows. Okay, so whichever we hear it, that's what it is. Okay, now for a downtrend, that's for a bearish market. Okay, for a market that is in the bearish phase, what you are going to see is this thing here. Now remember that this is the basis of market structure. Okay, market structure is basically and actually more complicated than this. There are more, and I'm going to show you all of that. I'm taking it slowly so you won't miss any step. If you understand this first step, you are going to understand the next step, the advanced market structure. But if you don't understand this basic step, you are not going to understand the advanced market structure. All right, so follow me as slowly as I go. Okay, so this is the bearish phase of the market. So when you come to the bearish phase of the market like this, what you are going to see is that price is going to also be moving in a wave, in waves, just like the previous one. Okay, but the difference now is that you are going to see a high like this, which is the highest point. And after seeing this high, the next thing you're going to see is a low. Okay, I'm going to see a low like this. Now when you see a low like this, you know that you have seen a low. Then the next thing you want to see is that price is going to make another high, but that high is going to be lower than the previous high. Okay, when it moves from this low, the high it is going to make is going to be lower than the previous high. Okay, so it's not going to get to the previous high, then it will reverse. Even if it gets to it, it's not going to go higher than this previous high, then it will reverse. Then immediately it reverses, it is going to give you another low. Okay, now this second low is going to give you will be lower than the previous low. Okay, so if it is lower than the previous low, which means it is called a lower low. Okay, whereas the high that is lower than the previous high is called a lower high. All right, I'm sure you're understanding this. Okay, so that's just how price is going to be moving. So give you this lower low, then it's going to give you another lower high. It's going to give you lower low, lower high, and then it's going to just continue like that. Lower low, lower high, just like that until the trend is over. Okay, now that is about the movement of price. The next thing you should take notice of is this. When price was moving upwards, you notice that it was breaking the highs. Okay, it was breaking the highs just like this. You can see it was breaking the highs. It was breaking the highs like this. You can see that. So it's breaking the highs like this. Okay, so this is what we call break of structure. Break of structure. Or you can just say for short BOS. Alright, that's just what it is. So this is actually break of structure or BOS when price is breaking the highs like this. Now break of structure in an uptrend only occurs at the high points. Okay, so price, what I mean by that is that price only breaks the highs of that structure. It doesn't break the low. Take note of that, because this is going to make the difference in your trading. This is what you're going to determine whether you are going to be losing or you're going to be making profits. Price is only going to be breaking the highs. It will never break the low as long as it's in a bullish phase. Okay, as long as it's moving upwards, it's going to be breaking the highs. Now we are going to be seeing break of structures to the upside. Okay, so take note of that. This is break of structure. This break of structure. This break of structure for the bullish phase or for the bullish market. Now we have also the bearish one. It is the same thing. The bearish market price is going to be breaking structure also, but the only difference is that it is going to be breaking this structure to the downside. Okay, it's going to be breaking it to the downside. It's not going to break it to the upside. Take note of this, guys. Don't make the mistake of thinking that it will be breaking to the upside. So it is going to be breaking structure to the downside, just like this, as you can see. So this is what we call break of structure. When price moves and goes below the previous low, we call it break of structure. That point where it crossed it, that point where it crossed the previous low, that's where we call break of structure. All right, then it is only going to be breaking structure to the to the lower side, to the downside. It is never going to break the structure to the upside. No, whenever I see it break structure to the upside, that is another thing altogether, and that is what I'm going to teach you also. I'm still going to show you that in this video. Okay, so when you're in a downtrend, only expect price to break structure to the downside. Don't expect to break to the upside. Now whenever it breaks structure to the upside, just know that something else is about to happen. Okay, so you change your approach to the market. But if you are in an uptrend like this, and then price is breaking to the upside, that's what you should expect to be following it. But if it eventually comes and breaks to the downside, like it comes like this, breaks it to the downside, just know that something different is about to happen. So what you do is you change your approach. All right, you change your approach to the market. That's it. Now we have this one here. This one is going to show us something more elaborate, because most times this price will definitely go and break the up to go and break the high here. This one will definitely come back and break the low. So what do we do in such scenario? How do we approach? What do we call it? What does it mean? Okay, so this is another kind of market structure that is more comprehensive. Okay, so this one, you see that just like the previous ones, price was also breaking structure. So this was a downtrend. Actually, this was a downtrend. So price gives us a high like this, and then a lower high like this. Then it also gives us a low like this, and then a lower low like this one here. Okay, so this is actually what price has been given. Now you see that something happened here. Let me show you this. At this point, instead of price to continue breaking to the downside, it came here and broke this high. After breaking this low, I want you to notice this. Don't take note of it. After breaking this low here, price came, formed another lower low, all right, from the lower low, and then went up, broke the previous high. So whenever you see this, what does it mean? What is it called? This is called change of character. Change of character, which you can put in short as change of character. CHoCH. Oh shit, this is in time. Change of character. Okay, now they call it in short form. Okay, so this is it. So this is what we call change of character. Please take note of this, guys. It's very, very important. It's very, very important, because this is what actually makes the difference. This is where you know that something different is happening in the market. So at this point, you begin to give the market a different approach, an approach different from the one you've been giving it. You need to treat it differently. Okay, so this is it. Now what this simply means is that this character that has been playing here, the characters playing here obviously are sellers. Remember, this is a downtrend here. The characters playing here, they are the sellers. Okay, but when price breaks above this high, you see that it means the sellers have been overpowered and dominated by the buyers. Okay, so this becomes an uptrend. So it is now being controlled by the buyers. So the characters who are playing here are now the buyers. Okay, so that's why it is called change of character, because the people who are acting here, the actors have changed, the characters have changed. So that's what it means. So don't think too much about where the name is coming from. This is just it, what I explained to you now. Okay, so a change of character to the upside. Now you can see the same thing happened here. Price also came and broke structure to the downside. You can see that after breaking this one, after first of all breaking this, the one above, this is a break of structure actually. Okay, this one was a break of structure. Then price, after breaking structure, then came back and broke the low. So this also becomes a change of character. Do you get that? Yes, I'm sure you got it. So when you see this change of character here, it simply means price is no more going up. It's now most likely going to be going down. You get that? Yes. That's just how it works. Then it will be followed by a series of break of structures. So followed by a series of break of structure. There we go. So that's just how it works, guys. Then at this point, you see another change of character here. Price break the structure here below, and then went break the high above. So this becomes another change of character. Now as price comes to go up, so it will keep breaking the highs and keep going up like this after change of character. Okay, so this is basically what market structure is like. Okay, this is exactly what market structure is, and I believe you understand it. And we are going to go to the price chart to see it. Now I want you to take note of this fact I'm going to say now. What is it I'm going to say? This move that we see here, if you are seeing this on the 1 hour time frame or on the 30 minutes time frame, if you go down to a lower time frame, let's say the 5 minutes time frame, you are still going to see this same move inside of another structure. Now you are going to see smaller ones. So by the time price moves from here, price wants to move from here to here. Okay, so by the time price wants to move from here, from this high to this low, it is also going to give you another market structure. All right, remember, it was moving from this very place. It moves from this low to this high, and then it wants to come to this other low here. So what it's going to do for it to know is that at the lower time frame, it is still going to give you this same pattern that we have here, this full pattern that we have in this higher time frame. It's going to give you exactly the same thing, but in a smaller environment. In a smaller environment, it's going to play out exactly the same thing that is playing out in the bigger environment. Okay, that's how it is. In you as a human being, your body, your full body, you are a full human being. But when you begin to disintegrate your body gradually, then you're going to find organs, you're going to find tissues, you're going to find cells. These are lower compartments of your body. Okay, so that's how it is. It's the same thing when it comes to market structure. So from your higher time frame, you scale down to lower time frame, you're going to see that the structure you marked out earlier also has smaller structures inside its substructure that looks exactly like what we have here. That looks exactly like what we have here in this higher, larger environment. Okay, so that's why when you are trading as a trader, you are looking at the bigger picture and you are also looking at the smaller picture. You don't ignore any of them. If you ignore any of them, you pay heavily for it. Okay, so what happens is that you see price will move this way. Now I'm going to change the color of this stuff. Okay, so price will move this way. Here gives a high, to move like this, gives a low, move like this, give a higher high, lower low, a higher high, lower low, and that higher high. Then it will now give a change of character here. Then it gives you a higher low, a lower high, like this. It's a change of character. Now it is at this point that you expected to sell. Okay, because this is the downtime you want to sell. It's at this point where it gives you this change of character and comes to retest that you expected to sell. So what you're going to see is that it will now drop and give you a lower low, and then higher low, sorry, lower high, lower low, lower high, lower low, lower high. So you can see here price has been making higher highs and higher lows, higher high, higher low, higher high, higher low here, just the same way it was doing it in the previous one. Just the same way it was doing it when it was what do you call it? The same way it was doing it at the higher time frame. That's exactly the same thing it's doing now. Okay, that's it. You can see that. Then at a point it now gives you a change of character. It will give you a change of character, then now continues dropping to the downside. That's just what happens in the market. Okay, so when you see this market structure at the higher time frame, that is why the best strategy to trade it is a strategy that involves an understanding of the market structure. So with this, you are sure of seeing where the price is going to from the higher time frame perspective, and then you are sure of finding a perfect entry point at the lower time frame. All right, so this is exactly how it is done. So at this point, it will give you another change of character like this, and then it will move again, starts making the same movement, high like this, until it will not give you another change of character. That is exactly how price moves every now and again. Guys, when you understand this, you will be able to trade profitably. But until then, you will keep struggling in the market. You keep playing hide and seek in the market. You keep losing your money. You keep paying the broker. Okay, so but I want you to understand this so that you will not be losing your hard-earned money to the market. Okay, so this is just everything about market structure. This is the advanced one here that I've shown you. This is the advanced part of market structure. Okay, so these structures that price is building inside, they are the ones we call internal structure. You either call them internal structure or you call them a substructure. Okay, it depends on you. It depends on the person talking. You can use any language. Internal or sub, they are the same thing. Okay, so now this is the mistake most people make. When price is, this is a downtrend actually. When price is in a downtrend like this, they will see this retracement. Remember, this is a retracement level here, and this is also retracement, or what we call pullback or correction. Okay, so this is a pullback. They will see it, but they'll go to the lower time frame. They will see this pullback. That price has broken this high here. When they see that price has broken this high and comes back to retest it, then they will buy. And when they buy here, not just that they buy, the problem is not just that they buy. When they buy, they will target this high. Okay, because by right, if this is an uptrend, right, or let me use this one. If this one here is an uptrend and price breaks a structure like this, if it comes back to retest and you buy, by right you should target this high, is it not? That's how we are taught, and that's actually what happens. So when you buy at this spot, you're expected to target the next high. So when you enter at this point, this level here, where price has come to retest, you're expected to target the high, which is here. Okay, so you can see, or a little bit above it, that is allowed. You target it and price goes and hits your take profits, because you are trading in line with the direction of the trend. All right, but in this scenario here, if you do not have the proper understanding of market structure and you see price break the structure in this what do you call it, in this pullback, in this corrective phase, you see price break the structure here, you will conclude that this is an uptrend. Okay, then you see break another structure here. Wow, to you it's a confirmation that price is moving upwards, and you forget what the higher time frame scenario is saying. Overall, from the higher time frame, this is an uptrend. Sorry, this is a downtrend. So if you have seen an upward movement at lower time frame, just know that it is a simple correction. It's simply a correction. So, but people who don't know, what they will do is that when they see this, they will go and buy. Okay, this is where they saw it. They will go and buy, and then they will target the high. They'll target this high. That is how we are taught to trade. So this is your entry, you target the high, this is your stop loss below. That's a good target, right? If it's an uptrend, you're supposed to target the high here. So they'll target the high, but unfortunately for them, price will just go up a little. Price just go up a little and then come back and hit their stop loss, and they'll be wondering why this thing hit my stop loss, man. This is a manipulation. The brokers are manipulating the market. But bro, you are wrong. It's you who did not take into account the higher time frame perspective of the market. You only took into account the lower time frame perspective. And so even if your analysis was right according to the perspective of lower time frame, it was wrong when you look at the bigger picture. So that is why we have what we call top-down analysis. Top-down analysis, TDA. All right, top-down analysis. This is the analysis that we do that helps us, take account of the higher time frame perspective of the market and that of the lower time frame. Then combine the two things together, make sure that both of them align together before we take our trade. All right. So whenever you are trading next time, I want you to use this market structure. Look at the market structure, read the market structure, and understand it at the higher time frame first. Then come down to your lower time frame, read the market structure, make sure that it aligns with the one that you got from your higher time frame. Then use that to find your entry condition. Okay, use that to find your trading opportunity. When you start doing this, believe me, you are going to start making money, real money from the business. Okay, so this is just how this thing works, guys. This is it. Now let's go to the real chart. I've talked enough. Let's go to the real chart and see. So if I have this market like this, if I come to market, what I want to see first is I want to see what price is doing. I'm going to zoom in like this to have a clearer view, like a wider view of what the price is doing. And I'm going to say this, you see how price is moving. This is where price broke structure here. So we can mark it. Can mark it. You see how price broke this structure here? Okay. Then it came down to this point. After coming down to this point, it went up to retest the same structure, just as I showed you in my illustration. Then after that, it came down again and broke the structure. Right? After doing that, it came down again. Notice that it was breaking structure to the downside and not to the upside. Then it came again, broke structure here. That's it. Then it came again. After retesting, it went and retested the structure. Then came again, broke the structure. Broke the structure here to the downside also. And that is it. That's just how price moves. Then after that, it broke structure again. Look at it. It broke structure again to the downside. And then after that, what happened? We see price break the high. So we call this what? A change of character. A change of character. So then price came actually here, price was not able to reach it. That's to show that momentum was high. When price fails to reach it like this, it means the volatility is high. The buyers have entered with speed, okay, with force, with full force. They are not joking with anybody. Okay, so price goes, breaks the structure again like this. Alright. Then it came back again. Finally, it broke here. So this is basically our shift market structure. this was a minor one because here it actually passed with a wick, so we not. I think this is a wick. Let me zoom in. Let me zoom in and find out. Alright, this was a wick. This was actually, oh yeah, okay. So this was a valid break of a change of character. So it's a valid change of character. It broke with the body of the candle. Okay. So here it was not able to come back. It wasn't able to come back. So it went up. Here it broke. As you can see, it broke the structure here. Shit. What is this one? It broke the structure here. So guys, just go with me. I want you to see it. See, after that, it came back here. We see price come back here and break structure to the downside here. Okay. So after that again, this was actually what we call sweep of liquidity. So price took liquidity here and couldn't continue, just to test this other block here. Then it moved up again and broke this structure that was here already. Okay, so this is it. So that's just how price keeps moving. But here we got price broke structure again. Okay, then after that we see a change of character here. This is a change of character. Okay, so this is our change of character. And then after that, okay, let me label it. Your change of character. After that, price moved up, tested this level and dropped. Okay, continue dropping. That is it. Until after that, again, after price finished dropping, it came back again and gave us another change of character. Give us another change of character here, right? Then went up, then went up, and then came back, retested this level, then broke structure again, broke structure again, and that's how it continued moving. Okay, so that's just how it's continued moving. This is how price moves, guys. The same thing will continue repeating itself. It's continue repeating itself. You can see it happening here. It just continue repeating itself like that. Okay, so but let's go to the let's go to a lower time frame. Let's say 5 minutes time frame, and see what we will get at the same place where we're seeing those structures. Let's go and see what we'll get. Okay, now I want you to see the internal structures. I want to show you about the internal structure I was talking about. This will have a very good example here. Now look at this. Before price actually okay, look at this. Price was breaking structure to the downside because this was a pullback. Okay, so after that, you see that price now came and also broke a high, which is this. Price came, broke this high, which was our change of character. Then came back, retested this place, and then started moving up. Okay, then broke high, was going, it didn't retest, formed another structure here, came, broke the high, came back, retested, went up again, broke the high. So as a good trader, as a professional trader, what you do is that you wait for price to give you this change of character here. Wait for price to give you this change of character that we have here, and then when you get that, you wait for price to come back and give you this retest here. Okay, so this is a retest. This is a change of character here. So once you see the retest, what you're going to do is to come here and then buy. And when you buy here, you're going to bring your stop loss just a little above it, and then you're going to target the previous high, because we are running with the trend. You are trading with the trend. Okay, remember they said that the trend is your friend. You can see this is 1:7 risk reward ratio. When you see people talk about having a high risk reward ratio, that this is exactly what they are talking about. This is exactly how they achieve it. You use higher time frame market structure to shoot your shots from the lower time frame, and the lower time frame will enable you to find the right entry, to enable you to take what we call sniper entry. Okay, so you trade from a vantage position. Now you can see this is how it is being played. Very, very easy, guys. Very, very easy. Then after price has broken above this structure here, you want to see another you want to see price coming back again. Okay, so notice how after price broke through this level, notice how it dropped again. So let's just look at how it dropped again. You can see we have the market structure here being played out again. I see them playing out again. Price broke this level, came back, retested, broke this level again, came back, retested, went up. It couldn't break the high. Then it came, and finally it broke this one. Okay. So, but I can't personally. I won't take this as a change of character. Okay, because this is where the low is here. So that's our change of character. This low here is our change of character. Okay, so at this point, price has given you a change of character. So you know that it's time to go short. It's time to start selling. And then you would have sold if you were able to catch this, because price actually didn't come back to retest it. But if you were able to catch it at this very point where it came back to retest, so you would have able to take the trade like this. Maybe you were able to catch it at the close of this candle. You are taking your trade like this, and then this is your target. Okay, this is your target, and it's as simple as that. The same thing you keep doing. Here, you can see what happened. Price also came, gave us a change of character here. After going down, gave us a change of character here. As it gave us a change of character, it came back to take a retest, and it retested this level. Remember, we are using the substructures to find out this whole thing. And it came back. It gave us this retest here, so you would have been able to buy at this spot, then set a stop loss below it, below this low, and then target the high. And you can see how price smashed it very easily. Now we know that if price is in an uptrend and you are trading with the trend, you are expecting price to give you to make a higher high, right? So for this logic, for this reason, which is very logical, people set it a little bit above the high here just to maximize their profit. Now remember, the higher the risk reward ratio, the lower the probability of hitting your take profits. Okay, so but this is what people do. I also do it sometimes, and it works, because if you're in an uptrend, price is expected to be making a higher high now. So if it breaks this high, it's going to touch this, it's going to go a little bit higher. So this is it. So I just add up a little more thing. You can see we got 1:5 risk reward ratio here. You can see it here. So guys, that's just how market structure works. Okay, so if you got value from this video, please smash the like button and drop a comment in the comment box below. But if you have a different view, let me also know in the comment box below. We have a Telegram link. We also have a Telegram channel rather, and we also have a TikTok platform. We also have a WhatsApp platform. So I'm going to put the links in the description box. Click the link and join us. Trade our signals. I drop free signals and chart setups almost every day. And believe me, it's been very, very wonderful. Like all my trades, I call them in the group and people make free money. Okay, so join us, trade with the community, and you'll be glad you did. Okay, thank you guys for watching. Remember, we are confluence traders and we trade our confluence until our confluences are met, until our conditions are fulfilled. We will not trade. So if you are watching this video, I want you to type in the comment box, I am a confluence trader. I trade my confluence. Okay, type it repeatedly, because the power of repetition will work with you to help you increase your win rate. Okay, so type it repeatedly, I am a confluence trader and I trade my confluence. I am a confluence trader and I trade my confluence. Type it repeatedly, and by the power of repetition, it is going to sink deep into your subconscious mind. Whenever you are trading, you are going to remember that you have to wait for your conditions to be fulfilled before you take any trade. And this will help you not to trade at impulse, to help you to reduce your losses and increase your wins. And that's how you become profitable in the business. Okay guys, thank you for watching and goodbye.